Yes, life settlement companies are legitimate, licensed financial businesses. The industry is regulated in 43 states, plus Puerto Rico, and you can verify any company yourself in about 2 minutes. But a legitimate industry still has better and worse companies in it, so here's what is worth knowing: what the regulation actually does for you, the 2-minute license check that works on any company, the red flags that should end a conversation, and what happens after a sale closes, the part almost nobody explains. Selling a life insurance policy is not a loophole. In 1911, the United States Supreme Court ruled in a case called Grigsby versus Russell that a life insurance policy is your property, and that means you can sell it like anything else you own. Today, 43 states plus Puerto Rico have specific life settlement laws covering roughly 90% of the population. In those states, settlement companies must be licensed by the state insurance department. Required disclosures must be made in writing. Sale proceeds move through an independent escrow agent, and you get a rescission period after closing, a legal window to cancel the sale, return the money, and keep your policy. In 2025, according to the Life Insurance Settlement Association, 2,955 policies were sold, and sellers were paid more than $626 million. Now the check itself. Every state insurance department runs a public license lookup on its website, and it is the same database regulators use. Step 1, find your state insurance department's license search. In Florida, for example, that is the Department of Financial Services licensee search. Step 2, type in the company's name, or the name of the person you have been talking with. Step 3, look for an active license covering life settlements or Viatical settlements, which is the older name many states still use for the same authority. Check both sides of your transaction. If a broker is shopping your policy, the buyer making the offer should hold its own license too. And if you cannot find a company at all, call the insurance department and ask. That is what the department is there for. Here's the part most people get wrong. Many of the companies advertising directly to you are providers, which means they are the buyer. A provider is licensed too, and there is nothing wrong with selling to one. But its offer is one buyer's opinion of what your policy is worth. A broker works the other way around. A broker represents you, the seller, owes you a fiduciary duty to act in your best interest, and takes your policy to multiple licensed buyers so they compete for it. Whoever you talk to, a few red flags should end the conversation. A company you cannot find in the state license lookup, pressure to sign quickly, any request for an upfront fee, and offers or fees that are not put in writing. A legitimate offer survives a few days of thought. A bad one usually does not. Last, what happens after you sign? The sale closes through an independent escrow agent, and the money is released to you once the change of ownership is confirmed. In most states, you then have a rescission period, typically 15 to 30 days, and in some states longer, to change your mind, return the money, and keep your policy. After that, the policy belongs to the buyer, along with every future premium payment. The buyer's servicing company will check in with you from time to time. That contact is routine. And one honest caveat: if your family still needs the coverage and the premiums are manageable, keeping the policy can beat any offer, and a broker who represents you should say so. Citizens Life Group put this explainer together. If you want a number for your own policy, the estimate link is in the description. There is no upfront cost and no pressure either way.